Hello and welcome to today's video, which is called Dump Coming. Let's dive together into the events and data so as to examine whether there is some indeed shaping up or not yet. You know pretty well what I do on my site for clients, whether swing or intraday trading. Thank you for liking this video and subscribing to the channel, it helps greatly. So let's dive into today's presentation, which is but a small subset of what I'm doing for clients' premium across the asset classes. Starting with yields, we had seen yesterday a reprieve, 2 bond auctions and somewhat lower interest rates fetched. What does it mean? When it comes to inflation, does it predict immediate ascent and climb higher in inflation metrics? Given what I have told clients about prices, various prices, input prices and so on last week, I do not see that as immediately burning. And yields kind of reflect that. Neither too hot nor too cold, not making any kind of a progress, but the retreat on the short end has been quite noticeable yesterday. Circling into equities, did Russell 2000 correspondingly rise? Did it lead S&P 500 somewhat up? You have the answer. It did not, and that's a sign worth diving into as it drives our trading and investing decisions. Next comes the US dollar. Very timed upswing attempt yesterday and clear descent today, driven by the yen. Yen keeps slowly but orderly appreciating. Is it creating any trouble for risk taking? Not yet. Do we see greed? Do we see fear? Neither of the two. We will dive into this in a couple of following slides. Now, coming back to crypto, and yesterday I mentioned some odd, peculiar vulnerability. And there is quite a decrease in volume, and if you look at CCI, if you look at RSI, the ascent taking it to roughly 98,000 Bitcoin is quite tired, and frankly this is motionless. Given what were the high expectations of the new admin, that must sure feel and be as a disappointment to crypto bulls, together with such a Ethereum underperformance. So you have my opinion as to where the longer term risks, meaning weeks ahead to months ahead, are skewed to. One snapshot from gold. And this is what Trading Signals clients had been getting. You sure have reviewed, and I will be linking to it, the very well received weekend presentation where I have called and gave you enough clues to expect gold bulls to return, starting with Asia, following up with European sessions, taking gold prices comfortably up before Tuesday US Open. And that's exactly what we had seen. What I had not been revealing yesterday was that I predicted a down day, slightly down day, not reaching more than, say, $2,000 in the gold price. And that's what we got. Dialing back of the bullish progress. And of course, clients know what I expect to be happening today and tomorrow. Slow grind higher. So we had somewhat worked off those overbought readings, not yet satisfactorily, but it's there. Welcome consolidation on a daily basis, and let's return to the main business, which is ascent. So this is the kind of service and accuracy that trading signals clients are getting, and the same applies, of course, to oil as well, where I called for an up entry to the week, which is exactly what we had seen, and a premium given level had been respected and prices turned south. Is this the end of the oil upswing? I don't think so, but again, this one I will be reserving premium because this is one of the higher confidence trades that I'm bringing to clients. And this is a very important aspect of every trading or investing endeavor. To pick your battles, to pick your markets, to pick your setups, to pick your opportunities and evaluate them as we go. Whether these high confidence setups conform and confirm with actual price action to what was the rationale for entering that trade. Moving on to S&P 500, I had been showing you yesterday this chart, this market breadth chart, and it got somewhat worse off. Is this the end? Is it getting primed to rise right now again? We had seen sectorally quite some interesting developments. Nasdaq had been not having its best day, but that ties into the rotations within tech that I had been highlighting not just yesterday, within semis, within cloud, software, and all these names we had seen as well one fundamentally important development, and that was Grok 3 introduction, and it was accompanied with the open source Meta solution. Finally, this stock price declining after a very long rising streak called. So this gives you quite an idea of what to expect sectorally. Financials taking a breather. Yesterday it was not very risk on day. Materials could have done better. Healthcare was the daily winner, and that's a defensive sector just as much as staples. And energy, of course, reflected the cold ascent in oil prices. So, what to expect from today? Is it much greed, much fear, or neither? And what is the typical outcome of such a market environment, where as well yields don't make a great progress either way? Meaning today or tomorrow? Would it be true in the week ahead? You can definitely look forward for more in-depth analysis such as this one. Forget not about joining my site for at least the free newsletter. The join page serves in helping you select what's right for your premium based on what and how you trade. Thank you for liking this video and subscribing to the channel. My trading story you know pretty well. Obligatory disclaimer, and let's talk soon.